All right, welcome back everyone for another deep dive. Today we're going to be looking at the Bank of Canada's recent interest rate cut
Yeah.
and what it means for all of us and for the Canadian economy as a whole.
Right.
So our main source for this deep dive is going to be the CP24 article
Sure.
titled "Bank of Canada Delivers Half Percentage Point Rate Cut, Says It Now Must Keep Inflation at 2%."
Hmm?
And this is actually the fourth consecutive rate cut since June.
Wow.
So that's a clear sign that something big is happening here, right?
Yeah, definitely.
So the big question is why? Why did the Bank of Canada make this move?
Right.
And what can you expect to see in the coming months?
Well, I mean, they just slashed these interest rates by half a percentage point.
Yeah.
They're really pulling out all the stops
Yeah.
to bring inflation down to that 2% target as quickly as they can.
Right.
And this aggressive approach, I think, is designed to,
Yeah.
give Canadians who are really feeling that pinch of high costs, give them some relief.
Okay, yeah. So it sounds like they're walking a bit of a tightrope here. Right?
Yeah.
They're trying to curb this inflation without sending the economy into a free fall, right?
Exactly.
Did that CT24 article shed any light on that at all?
It did. Yeah, it did.
Okay.
It highlighted that inflation actually fell to 1.6%
Mm-hmm.
in September,
Wow.
which is a pretty significant drop.
Okay.
And they're attributing this to a few different things.
Right.
Easing shelter costs,
Yeah.
a better balance between supply and demand,
Yeah.
and lower global oil prices.
So that's less competition for housing,
Yeah.
more goods available on the shelves,
Right.
and cheaper gas at the pumps.
Exactly.
Okay, and those are things that people can actually see, and feel in their everyday lives.
Yeah, for sure.
But let's dig a little bit deeper here
Yeah.
into the economic side of things.
Okay.
The article mentioned the Bank of Canada's monetary policy report, right?
Yes.
What insights can we glean from that?
Yeah. So, you're right. Those are the tangible effects
Yeah.
from that monetary policy report.
Yeah.
We can see that the Bank of Canada is acknowledging that these high interest rates have been putting a damper on economic growth.
Yeah.
And the labor market is really feeling it too.
And that's a concern, I think, even if you haven't been directly affected by layoffs or anything like that.
Absolutely.
Yeah.
Businesses are getting very cautious about hiring right now,
Yeah.
which impacts, job availability, wage growth, and just even that overall economic confidence.
Yeah.
And this is especially hard on, young people
Yeah.
and newcomers just
Yeah.
starting their careers.
Yeah. So less hiring means fewer jobs, potentially lower wages,
Right.
and this general sense of uncertainty.
Okay.
Not a recipe for boom times.
Not really, no.
Did the report offer any clues about what we can expect going forward?
Well, they are projecting a rebound in economic growth in 2025 and 2026
Okay.
as interest rates continue to decline. So this means there's hope,
Yeah.
for more affordable borrowing.
Right. For things like mortgages.
Exactly. Mortgages, loans. Yeah.
Which has got to be a relief for anyone who's been putting off, a major purchase.
Absolutely.
Because of these rates.
For sure.
But you mentioned this is just a projection.
Yeah.
What are the chances these predictions could change?
Well, economic forecasting, it's not an exact science.
Yeah.
The Bank of Canada, they're keeping a close eye on everything.
Yeah.
And they've indicated that they're ready to make further rate cuts if the economy doesn't shape up the way they expect it to.
So it sounds like we're in a bit of a wait-and-see mode.
Yeah, kind of.
But there is one date we should all circle on our calendars, right?
Absolutely.
Yeah.
December 11th.
Okay.
That's when the Bank of Canada will make its next interest rate announcement.
All right.
So mark it down
December 11th.
because we could be in for another shift.
Okay.
Yeah.
All right. So
Big day.
big day coming up.
Yeah. Yeah, this December announcement, this could have ripple effects on everything from mortgage rates
Right.
to
Yeah.
the price you pay for groceries.
Yeah. It's like a chain reaction.
Yeah,
Like one change just triggers this whole cascade of effects, right?
exactly.
And the Bank of Canada is really trying to steer this ship,
Yeah.
keep the Canadian economy on a course that benefits everyone, right?
It's a delicate balancing act for
Yeah.
sure.
Yeah.
But they are aiming to control inflation without causing too much disruption to the economy.
Right.
There are always risks, but I think
Yeah.
the Bank of Canada has a pretty long track record of navigating these choppy waters.
Yeah.
They have a team of experts who are constantly crunching the numbers
Yeah.
and making adjustments as needed.
So they're not just setting rates and hoping for the best.
No, not at all.
They're actively managing the situation based on real-time data.
Yeah, exactly.
Okay, so they're watching key economic indicators, right?
It's like GDP growth and consumer confidence indexes and things like that.
Yeah, all of that.
Speaking of indicators, when we're looking ahead to December 11th,
Yeah.
what should we be keeping an eye on?
Okay.
What signs might tell us whether the economy is headed in the right direction?
Well, inflation is always a big one.
Yeah.
If it stays around that 2% target, that's a pretty good sign that the bank's strategy is working.
Okay.
We also need to watch those other factors that we talked about.
Okay.
Shelter costs, supply and demand, and oil prices.
Yeah.
If any of those start to go haywire, it could signal that the bank might need to,
Right.
adjust course with more rate cuts.
So it's not just about the numbers themselves, it's about understanding those underlying trends.
Yeah.
Your forces that are driving them, right?
Exactly.
It's about seeing that bigger picture and how all the pieces of the puzzle fit together.
You got it.
So
Yeah.
let's say the Bank of Canada does decide to cut rates again in December. Okay. What could that mean for someone who's thinking about, I don't know, buying a house?
That's a great question.
Yeah.
I think a lot of our listeners are probably wondering that very thing.
I would imagine so, yeah.
Well, in simple terms, lower interest rates usually translate to lower mortgage rates.
Right.
So that could make it more affordable to borrow money for a home.
Right.
However, there are other things to keep in mind, like
Sure.
like the overall state of the housing market
Right.
in your area.
In your specific area.
Exactly. And of course, your own personal financial situation.
Right. It's not one size fits all.
Right. Exactly.
Everyone needs to do their homework and figure out what's right for them.
Absolutely. And if you are making a major financial decision, it's always a good idea to talk to a financial advisor.
Yeah.
They can help you weigh the pros and cons and make the best choice for your individual circumstances.
Great advice.
Yeah.
Okay, so let's zoom out for a moment.
Yeah.
What does all this mean for,
Yeah. The average Canadian.
Right.
What are the key takeaways from our deep dive today?
I think the main message here is that the Bank of Canada is taking a very proactive,
Yeah.
hands-on approach to keep the economy stable.
Right.
They're really laser focused on inflation
Okay.
and will adjust interest rates as needed to meet that 2% target.
And while there are some uncertainties on the horizon,
Yeah.
the bank's projections suggest that we could see a turnaround in economic growth in the next couple of years.
That's right. So there are reasons to be optimistic.
Okay.
But it's crucial to stay informed and be prepared for potential shifts in the economic landscape.
This is why I find economics so captivating, It's not just about abstract numbers. It's about people's lives.
Right.
Their aspirations, their worries, their dreams,
That's a great point.
Yeah.
And the decisions made by institutions like the Bank of Canada
Yeah.
have a very real impact on those lives.
And that brings us to you, our listener. We've explored the Bank of Canada's recent moves,
Right.
the factors that are influencing their decisions,
Yeah.
and the potential implications for the Canadian economy as a whole.
Now we want to turn the tables and ask,
Okay.
what personal financial decisions might you need to rethink or adjust in the coming months?
Yeah. Are you thinking about, making a big purchase?
Right? Or investing in the stock market?
Or perhaps starting a new business?
Maybe you're just trying to figure out how to manage your day-to-day expenses in the face of rising costs.
Yeah. Whatever your situation,
Yeah.
we encourage you to, take a moment to reflect on what we've discussed today
Absolutely.
and consider how these economic trends might affect your own financial journey.
Because as they say, knowledge is power.
There you go.
And the more you understand about the forces at play in the economy, the
Yeah.
better prepared you'll be to navigate whatever challenges and opportunities come your way.
Even if you don't consider yourself like a finance guru or anything, just having that awareness
Yeah.
of the bigger economic picture can really, give you an advantage.
I completely agree.
Yeah.
It's all about being proactive and informed
Right.
rather than being caught off guard by these unexpected changes.
Exactly. The more you know, the better equipped you are to make,
Right.
those smart decisions.
Being able to adapt is key.
Well said.
Yeah.
So until next time, keep those minds sharp and those wallets protected.
Absolutely.